All right, good day to you all. Sam here with you on Tuesday, April 17th, kind of mid-morning here, and when we close out the polling that we do amongst members, and we've got three videos to be reviewed today. First one is Bitcoin. I've got it here, Bitcoin to the dollar. This is a 4-hour on Bitfinex. So we let the members choose which exchange we're going to review it on, and this was the most requested. So here I am on the 4-hour here, and of course they're going to all look relatively similar. So this should be relatively short. There's not a lot of change since the last video I did about 4 or 5 days ago. So the real question is, do we have a good pivot down here? So we can objectively make a few statements here at this point. So this is my current count here. I do have us finishing down here. We can't confirm it until we see what happens over here. But I'm now currently holding on to this as my primary count, with this being a 1 and a very deep 2. And it completing down here in essentially a WXY. Now I've got all the detail here. So we've got our first ABC. Then we've got our X wave, and then we're finishing with this second ABC. Now the unusual bit of it, and some will tell you that it's an indication of strength, is that we have this truncated fifth down here. So it certainly happens, and you could easily deduce from that yes, indeed, that is a sign of strength. But it was and still remains just a point of, it's unusual, right? So it happens, but it's not the ideal scenario. But what it does do, this whole area of pivoting down here, now as deep as that is, if we work from our low here to our high, right, we see we've wicked even through the 887. As deep as that is, we are still within an internal retracement here. We do not violate this low. That's an internal retracement. So technically, this plays as a 1-2. So if we're going to come out of this as a 1-2, if indeed that's what we have here, then we can do some projections here based on the statistical probabilities that we know to look for. And we can project up here, as we know, as I've shown you many times, that the negative 100 will be very close to the 1618, which will be very close to, which will be the high probability zone. So if we're thinking 1, 2, and if I were to draw it up just to show it to you, right? So if I take the length of my 1 projected from this proposed 2, you can see up here, because we've gone so deep, it's actually a little bit shy of it here because of the depth of that retracement. So there's our wave 3 target. If this is ultimately going to play as a 1, 2, and we're going up for a 3, 4, 5. Now that would put us, challenging the old highs, the very bullish development. So you look at that and you say, okay, well, how are we going to get there, right? So if this is our 3 target, and we are going there, and we don't know that we are, but certainly that's a reasonable proposition that if we are going to go into an impulsive move here, that would be a likely target. That's the highest probability target. So why would we use anything else? Of course, first thing we have to do is get beyond these highs so that we can get 100% the length of the 1 here, projected from the 2. So this target right here, as we call it 12,275 or 12,300. We want to get beyond that so that we know we have the potential for this to be a third wave. So with that as a target, then we have to kind of construct in here and say, okay, well, if that's going to be my target for a third, well, how am I going to get there? Well, I'm not going to go straight. So you can see we have the potential for this for a 1 wave to be going in. So if we think about it in the larger context of where we'd be going, if this is a 1, we're likely going to get our 2, 3, 4, and 5 that would put us up there. Let's change that color, and just so you can get the context of it here, let's put it into such that you can see the wave structure, right? So how do we get there, right? It could be a deep 4. We don't know. This is all just projection. It's all just hypothetical, a potential roadmap for us, on the assumption that this is a good pivot low. We've got a motive wave coming out of here. So far, it looks like we've got an impulse wave to set us up for a potential 1, knowing to anticipate the 2. Right, so now we look at that and we think, okay, well, if that's going to play that way, right, we can take this off. Well, we know certainly we're going to run into resistance on the way back, right? As the bears fight for their view. So we can look here and we can say, okay, if it's going to get there, I know, well, likely, certainly I'm going to pull from the high to the absolute low. I'm going to look here. Well, this is a likely spot where we're going to hit some resistance, but first we have to get through the 50. So you can see what we've done here is so far just swing high to swing low. We've come right to the 38. And we've run into some resistance here. You see the point of control looks essentially just splitting. So the market is accepting this price here. Well, let's call it 8,100. Right in this range, we have a high degree of market acceptance. Thus, the most trading here at our point of control at this price point. So now the question becomes, how do we move away from it? So likely targets here, we can see we go into some low volume nodes a little bit. If we start to retrace in this fourth, we come down a bit. We're going to go into some low volume nodes, pardon me, I should say, low volume nodes here where we have potential for a market to react here as the market either pushes through it quickly or we see a market reaction coming out of those low volume nodes. So if we look here, this certainly has the characteristics of a 1, 2, 3, 4 setting up potentially here for our fourth, and this will be the tell as to whether or not we have potentially a new trend starting. Do we get that fifth to give us a motive wave coming out of this low down here, to give us more confidence in the idea that we have a good technical low and that we have a new trend underway? We want to see this push up to get to a fifth so that we can look at that and go, okay, well, likely what we've got here now is a one wave, right? There's always the possibility when we have a 5 that it could be an A, but the bias at this point, given this low here, would be that that's a 1. We'd look for a 3 waves down in the 2, and then we'd look for the third of the third. That's the wave that we're looking for, the third of the third. Right? So can we get that? Well, first we got to get clarity on whether or not we've got 5 waves here into a 1. Now on this, I'm going to take this wave off now and say, okay, well, if we're going to do that, right, the anticipation is, oh, let's dig in a little bit more. So we know this resistance is going to be here. Now, we also have to consider the fact from down one significant pivot. Pardon me. Here's the X wave I'm looking for. All right, so from my X wave down to what's proposed to be my C wave completing. So here's the X, and then I get the A, B, C. So I certainly want to look at pulling from the absolute low. So here we see here what we've done. So potentially now we have the third running into resistance on a bit of a front run of the 618. We know that's likely to be stiff resistance. We've gotten through the 50, gotten through the other side of the Vegas wave. So we have this little push here now, and we've run into this resistance here. If we look left, there's, you can make the case that we've got this pivot here, creating potentially some prior support, becoming some resistance, but it's essentially in conjunction with the approach on the 618. Right? So not surprising at all that that's where we get, and you can see we have a little divergence here. Not surprising that that's where we get the resistance. So we have higher prices here. Let me see that. So we've got this push higher in prices, but look how we don't follow suit with the RSI or with the Elliott oscillator. We have a divergence. So it's implying that we have this part of the trend weakening, which sets up the 4. So let's go in on that. Let's go down to the hourly and see if we can get some sights on it. So potentially now we have the third in. Right? It's just potential. Right? We don't know, but it certainly looks like we have a candidate here. It looks like we have a contender here. So we can see the subdivision is there within this degree. So we can get a 1, 2. It looks like we've got 3, 4, and either we've got a truncated 5th here on this as well, or we got the 5th there. Too soon to tell on that. So let me bring this down to a smaller time frame, and we'll change that color, and we'll take it down so it makes a little more sense so we can keep track of where we are. So potentially now within our 1, 2. Right? So we get our 1, 2. And we go, okay, so where is this the 5? That was the absolute highest high of it. Can I get 5 within that? Well, if this is my 4 here, looks like I've got 1, 2, 3. It looks to me like I'm more inclined to say that's my 5th here. This was just a little spike high. So am inclined to label it that way. Now, additionally, so what can we do, right? So how do we help identify where we are? So knowing that that resistance is there, I don't need that anymore. So I'm going to pull some of this off. So let's just do some measuring, as you would with any potential Elliott structure, to help us identify likely pivots for these. Okay, so here's the first one. So if I look at that from the algo perspective, we got the deep 2 here. This is not we'd have to draw this, but it's kind of interesting that we go right into the golden zone here. And now we've gone all the way to the extreme targets. But that's just one we want to look at here. So let's look at the length of our proposed 1 wave here, projected from our 2. And then if we just pull this over, you can see here that we get an extreme here, where we get the 2618. We know that's an extreme target for this as our 3rd up here. So that's rarely do we see the markets moving beyond that without some sort of reaction. It just seems to be the way the markets react to that. That's about as far as it'll go without getting a reaction. You can see potentially now what we have here is our A wave going in. So if we look at that and say, okay, well, potentially now I've got an A, and then that sets up the potential here for now. We don't know for sure that B is in, but right now that's the pivot high that we've got. So we've got a contender here for an ABC to finish. Now we can check this. So if I zoom in here, we know a B wave can be anywhere from the 50 to the 786. So if I pull it from this high, my proposed high here, if I can get this hot, and I go down to my A wave, all right, well, right in the zone there between the 50 and the 618. So that's a contender now. So we get an algo target here. We've got our potential wave 4 here. We've got the Vegas wave here. So as we zoom in on this, we can start to build a case for the next opportunity to be a buyer. So given that we have the potential now here for this 3rd wave to have completed with the appropriate subdivision, we can now just look at it and go, okay, well, B's in. There's that potential target. So I'm going to take my 2-wave low here, my proposed 2-wave low, and working from that 2, if my 3 is in, I know I can look for targets here. Here's my high probability zone between the 23 and the 38. Right there, right? That's the highest probability zone for my wave 4, right? So here I'm putting this right underneath because I get this confluence down here where I can tighten that up. So I've got an algo target. So the algos that are written to sell this with this as their target, we have that. And then we have the Elliott count where we know if we're going to get, in this case, an impulsive wave. The stronger the count, the higher the probability that we put in our 4th around the 38. And I've got this cluster here with the Vegas wave giving me that level of support. I've got some lower volume nodes here, although this does get my attention that if I look here, I've got, you see here, this low volume node here at the 50. So, something to be aware of. So it may be such that what we want to do is look at maybe an initial entry here, but recognizing the possibility that we get a deeper retracement in the 4th. We know the algos will be written to buy it down here at the 50. So we get a second zone here. So I get my 618, that's my second algo target, and I get my 50%. So the way to approach this may be, okay, I've got first bite at it here, but anticipating that I might be adding a second time here. So if we think about that and look at the risk reward potential, and say, okay, well, here's my first algo target here. So that's relative. So if we were to go to the 50, right? So if we were to come to this 50, our target is up here. That's the algo target from this 50, working from this pivot low as a proposed 2. Now remember, algorithm doesn't care about an Elliott count. It's just working off of major pivots. So here's one we have to consider. Here's one. So if you're a front runner here, well, if we split the difference of the box, that's 77.52, at least on Bitfinex. And if we're going to front run the 50, now we're at 75.50. So you've got a little bit of a spread there that you'd have to be comfortable with an initial buy here. So maybe 25% of it here, maybe another 50% of it here. If you're continue to be bullish, we can look at the potential here for the ABC to go into the length of the A projected from the B. Well, here's the 100%. Here's the 1272. Are we going any deeper than that? that is, we start to lose the probability, and the strength of the count diminishes the deeper we go in the 4. So this area here at the 100 would be a point. The 1272, that's a very common target for if we get a push lower in the C beyond this, beyond the 100. So this and this set up to me as the 2 buy zones here potentially for our 4th. So you want to pay attention to those, recognizing that you might need to be averaging down your price. So if I just do that and I look at potentially a stop out point. So let's say we split the difference. So I'm going to be a buyer here at the 100. Here's my algo target up here. So now it's a process of saying, well, how much risk am I willing to accept? So if I go to if I give this right there, there's 4.7 to 1. I may not want to give it that much room. If I get just on the other side of the 50, there's 6 to 1. So you look at that and go, okay, well, that's assuming now. That's assuming I'm a buyer here and I get additional weakness. So even though I'm a buyer here, I'm averaging down here to get. So that's why I'm putting the entry here for an average price at let's call it 7,600. Right? So we can get an idea of if I'm buying here. So my risk here, note here, my risk here is that much. So if I just so you can see it visually. If I'm a buyer here, my risk is that much. Do you see what I've done there? So my target, it doesn't move. It's just a question of averaging down the price. So if I split that difference, so if I buy a piece of it here, could be 50% of what you're willing to allocate to this trade is here, and the other 50 is here, and your stop is on the other side of the 50. It's not ideal in terms of stop placement relative to where the market might be going, but it's relative to the strength of this impulsive wave relative to the odds decreasing as the depth of it goes lower. So even though we could go all the way to the 65 here and not overlap the 1, the stronger the count, the more we want it to see it put that pivot in no deeper than the 4th. We start reducing the probabilities that we have a 4, the deeper that retracement goes. So I would propose to you there's no reason to ride it down lower, because now you're in the hope mode. Now you're like, well, I know it could go to the 618, but what's happening now, the probability of that 4 reaching that target starts to diminish because you're eroding the quality of the Elliott count by the depth of that retracement. Doesn't mean it couldn't happen. It absolutely could happen, because there will be algorithms written to buy it there. So that still is probable. But my point to you is, if you're putting that much risk on it, now look what you're doing here. If you're putting that much risk on it to take it all the way down to where we invalidate this impulsive wave, look at the size of the risk. So we now we come down here, look at that, we're on the other side of it. Now we're at 2.67 to 1. I propose to you, not at least in my rule set, I won't take a trade if I don't have 3 to 1 risk reward. The risk is not worth it to me if that's the case. So if you look at that and you're objectively going, okay, well, I could be a buyer here at the 38, I could be a buyer up to the 50, stop on the other side of the 65. Well, 2 to 1 is not good for me, not good enough for me. So I start backing this up. Well, I don't want to be, I don't want to be I don't want to put my stop as a front run on the 50, right? That's a likely target. So I want to be just on the other side of it. So there's 6.2 to 1. That's reasonable. And that's on the assumption here that I'm going to have a partial fill here and a partial fill here. Now, let's look at it this way. What if we get filled here and we get this reaction? Right? If we get filled there and we start heading up and the second order doesn't get filled. Well, that's more bullish. Of course, that's more bullish because we put in the C low and the 4 here at the 38. That's the ideal scenario. That's what we want. But look, now what that does to our risk reward. Okay, so now I've got 6.28 to 1, but I've got to tighten up the stop. Where do I want to be here? Do I want to get just on the other side of the 50? I want to give it a little room. So there's 4.3 to 1. Right, so it's kind of just a judgment call you have to make with yourself, pardon me, I got to bring this down, to get it clear and consistent with your trading plan. So what's the maximum amount of risk that you're comfortable accepting there? What does your trading plan dictate to you? Right, if you're a buyer in here, if we get this because certainly we've got a really strong little hot spot there, and we're going to give it that much. There's 3.92 to 1. You're going to give it to the other side of the 50 and the 1272. The other thought is you just tighten it up and say, if I don't get precision here, if I don't get into this little hot box and I bounce, then I'll take the small loser. Right there, I've got 11.5 to 1. So I'll take the small loser. If it keeps going down, I'll just look to re-enter the market. If we get lower and we go to the 50, well, then I'm just going to take this down. Right, so I've taken one loss. Now I'm a buyer at the 50. Here, then again, it's just another judgment call. Do you want to give it to the other side of the 65? Well, you can get 4 to 1 there. You might even have to really consider. I wouldn't go beyond that. I'd be on the other side of the 65. So what do I get there? 4.1 to 1. If we go that low, right? Target hasn't moved, right? So if we're going to get all the way down to the 50 and we get the algo reaction there, they buy it. There's their target. Well, I still get 4 to 1 essentially there. And nothing says that we have to stop there, but that's a reasonable target up here. Right, we know the algos, there'll be a reaction there as they hit their target. So if that's a buy there, got to give it enough room, so that may influence the amount of size that you're putting on there. Nothing says you have to give it that much room. You might just tighten it up and say, hey, there's 8 to 1. I'm not going to give it any more than that. I'm going to give that. There's my buy at the 50. I don't want to take it any lower than that. Right, that's the 100 on that side. So there's a reasonable, just a scenario in terms of where we're going and how we could get there and how you might approach that whole process of going, what kind of risk reward am I comfortable with? What would I rather have happen? I would propose to you, you're always better to take the small loser. When in doubt, tighten the stop. Tighten the stop. It's just, you can always re-enter the market. So, we just intuitively, we don't want to accept the stop. We don't want to take the loser because nobody likes to getting stopped out. I don't like to get stopped out. I get stopped out all the time. But I've conditioned myself over the years to know that because I've done the wrong thing so many times. So many times I've done. I know I'm right. I'm just going to give that a little more room. Little more room. Right? So the second you reach, you even the impulse hits you to say, I'm back that stop down a little bit. Stop yourself. It's just not. I've just done it. I've done it too many times. It's almost always a mistake. And even if you get away with it, as I've mentioned many times before, all it does is reinforce the bad habit. So the next time you're thinking, I'll give it a little more room. Because one of these times you're going to give it too much room, and the thing is just going to just continue to go. And now you're like, oh, well, I can give it to the 786. Oh, well, it's not going to take out that low. Oh, well, I'm a long-term holder. You do what you like. I'm just, the value I try to bring to you is very much a large part based on my experience. And I have done every dumb thing there is to do. I've done them all. And I just, the lesson I want to convey to you is that the market has an unbelievably perverse way of punishing mistakes. Maybe it's not perverse. Maybe it's just as it should be. Right? It's the difference maker. The mistake is moving the stop, and the market will almost always punish you for that. And as I said before, even if you get away from it, you still are going to get punished someday because you're going to be tempted to do it again because you got away with it the last time. Always better take the small stop. You can always go back in the market. I know nobody likes to take the stop. It's that negative reinforcement. Oh, I was wrong. Nobody likes to be wrong. Well, get used to being wrong, because no matter what you do, no matter how you approach the market, I don't care who you are going to be wrong more than you're right. And if you can't come to peace with that, you shouldn't be trading. Somebody else should be doing it for you who understands that and who can accept that and be comfortable with it. No, that's just the nature of the beast. So the question becomes, how much am I willing to lose when I'm wrong? Because I know I'm going to be wrong more than I'm right. Those are the hard lessons. Believe me, I learned them the hard way. The hard way. So I'm just conditioned. If I'm not sure, or if I'm any doubt in my mind, I'll get out because I can always get back in. That's how I look at it. I'd rather take the small loser than just continue to hold on to the fact that I know I'm right. I know it's going higher. All right, man, damn it, I'm 24 minutes. Sorry, I didn't mean to go that long on this one, but, maybe a few things to think about there, and hopefully we see this resolve with a 5, and then we can get our hands around the next retracement, which will be a 50. All right, guys, I'll